Hey, I'm Brandon,
Hey, I'm Curtis.
and this is BrainShake.
Get shook.
Curtis is the special guest host today. He's been promoted from guest. So Curtis, maybe, do you want to tell us a little bit about your background, maybe?
Yeah.
Switch it up a bit.
So my background is in science and technology because I enjoy surfing Reddit. There's tons of things to be learned on there. Most of my knowledge comes from that. A bit of schooling, general knowledge on YouTube. I am, as we talked about last time, the guy at the party who talks about tech and space and this and that.
Right, and you did 2 years of astrophysics.
2 years of astrophysics
Now
at St. Mary's, and I'm a computer science student at St. Mary's. And
I'm a 2-time university dropout. I don't think I've told you guys that yet.
did I'm a one-time college dropout.
Nice. We're in the same club. Yeah.
So this is our weekly guest, Corey Boissonneau. He is a entrepreneurial student studying at St. Mary's University. Marketing student with a strong passion of entrepreneurship.
Yeah.
And he is our resident expert in cryptocurrency.
Yeah. And I should mention Isaac's in Toronto, which is why we have Curtis filling in today for him. But he'll be back for next weekend, for next week's podcast.
I miss you, Isaac.
So in layman's terms, what is cryptocurrency?
So cryptocurrency is kind of like a magical internet money in layman's terms. In essence, there's a system called the blockchain that organizes all of these transactions that would occur on the Bitcoin network or any other cryptocurrency network. And to do so, to actually have a blockchain system running, you need people putting in computer power, which would be, in this case, hashing power.
So what's, like, as far as cryptocurrency goes, right? People, is this mostly used like on the dark web, or can this be used in regular B2B business? And like I've only done minimal research on it, but it seems to me like it started off being something that was mostly used on the dark web and stuff.
So that definitely helped validify that Bitcoin can be used for purchases necessarily across the world,
right.
And that it actually has a use, right? But it's gotten really a black sheep type of identity pegged to it because of that, even
right.
though that is simply just a drop in the bucket of the things that you can use Bitcoin
right.
for. Yeah.
Because I first heard of it when Silk Road came out.
Right.
And then the way they purchased their illegal goods and services, they'd use Bitcoins for it. And when I first heard of Bitcoin mining, I had my theory was that what algorithms and equations people were solving was the illegal transactions on the Silk Road. But that's not the case, is it?
So when you mine Bitcoins, basically what you're trying to do is win the lottery. So every 15 minutes in the case of Bitcoin, and it varies in different cryptocurrencies, there's what you call a block, and that's why it's called the blockchain, because it's a chain of all these blocks of about 15-minute intervals. So when you're trying to win this lottery, you're essentially trying to win the reward that the blockchain, in Bitcoin's case right now, is 12.5 Bitcoins that are released every 15 minutes. By validifying all of these transactions that occur on the system. So if I were to send Curtis your money across the world, that transaction needs to be verified just like in any other bank. But on the Bitcoin system, it's verified by computers. So we need computers to run the system. So people need incentive, which is kind of like winning the lottery in this case.
Okay.
So the more hashing power that you put up, people generally use graphics cards because they do a better job at organizing this particular type of information.
Yeah, they're faster than CPUs. At first, people were using CPUs, right?
Yeah. I actually have an app on my phone here that I can mine different sorts of cryptocurrencies with my phone using the GPU in it, but it's very slow, and I mean, I'm making about 2 cents a day doing it. So people nowadays just have these kind of like servers. They're called ant miners or ASIC miners, and just like graphics cards lined up with a fan or two, and they serve the single purpose of trying to organize these transactions on the Bitcoin network, or blockchain rather.
So is it the first person to hash an equation or to take care of a transaction, then do they get all the coins?
It's exactly that. So what happens every 15 minutes or so until this question is solved, the the network releases a mathematical problem. And the mathematical problem is as difficult as the amount of people within the pool. So like, if the problem becomes too easy that every 15 minutes or so, or before 15 minutes, the problem is solved, the system makes it more difficult, or adjusts the difficulty to make it on average about 15 minutes, or to be solved every 15 minutes by the pool of people putting their hashing power into it. So the more people that are mining for Bitcoins, the more likely that it'll be solved in less than 15 minutes. So therefore, the system makes it the problem more difficult to be solved. And when this problem is solved by one individual, 12.5 Bitcoins are awarded to that person. But keep in mind that there are thousands in one person. So if I have a Google server that's mining Bitcoins for me, then I'm among this pool of people that are trying to win that one problem within 15 minutes to get 12.5
So you kind of
Bitcoins.
pulled into these groups, and then whoever happens to be the one that gets it gets the full reward.
So nowadays, what people generally do, because there's just so many people mining, there's so much hashing power, that if you had like one server, one of these ASIC miners and AMP miners, the chances of you winning are like next to none. So what people do is they make these groups of people, and they're called mining pools. And you pool all your hashing power together, and on an equitable basis, you are awarded so many Bitcoins by your hashing power in the pool if your pool wins. So if your pool wins, you're given a percentage of it based on how much computing power you give to the pool.
Is there whole businesses around this, where people hire people just to mine all day? And
it depends on the costs involved, right? So the highest, or the biggest cost in mining is electricity. So in places where electricity is cheap, aka China, you'll see a lot of these giant not Google size, but relatively huge server rooms that are just mining Bitcoin to where it's cheaper.
So let's talk a little bit about the history of Bitcoin. I was doing some reading. So this guy, or obviously it's a fake name, Satoshi Nakamoto.
Satoshi Nakamoto.
Nakamoto. Okay. So I was reading, it said sometime around the 2008 crash. That's when he released this concept.
So it was kind of like a perfect storm for him. So I don't know too much about Satoshi. Nobody knows who he is.
It's like
first off,
kind of a myth. Like, who is
the myth?
Exactly.
It could be a group of people. It probably is a group of people.
It could have been a group of people. But like the story out there is that this person, who could have been a pseudonym, they assume that he was actually a Japanese student at MIT or something like that, going under the pseudonym of Satoshi Nakamoto. But he was working on cryptography with a few other guys. I forget their names. And the idea of blockchain is actually based off of a very similar concept that came up, I think, about 10 or 15 years ago. So when he formulated the idea of blockchain, he released it in a perfect storm, because 2008 was a financial crisis, a housing crisis, right? So people had a lot less faith in the banking system at that point. So it was kind of like a really good start for him to release that around then. So the history of Bitcoin. What else?
So I mean, that's all I really knew. Is I just find that so interesting. It's like whoever this group or person is, they were waiting for the right moment.
It's not that they were waiting it,
or just coincidence.
It was just coincidence.
Oh, that's pretty cool.
Was it coincidental, or did he jump at an opportunity?
He could have waited, but why would you?
Yeah, exactly.
It just kind of lined up perfectly.
Everything lined up. Yeah.
So when it first came out, how much was a Bitcoin worth?
That I actually don't know, but I do know that it was less than 5 cents. The thing is, it's not like a stock. It's not like when you have an IPO, like an initial public offering, which is like Bitcoin is kind of like a stock, but it's not really. It's technically a currency, obviously. But like an IPO, you'd have people come in and assess whatever your system, in this case the blockchain, like the idea behind it, but in a stock's case, the company, what it's worth. And then you'd release it at a certain price, and then people would either say that it's too expensive or it's too cheap. So if it's too cheap, they'll buy it up at a good price and it appreciates, right? Or the opposite happens in the case of a stock. With Bitcoin, I actually don't know how the IPO went, or when it was just released technically. But I do know that it was under 10 cents at the beginning. So like, in theory, it would have been worth anything above nothing. when it was just released, because that at
Virtually
least Satoshi Nakamoto believed in it, and that means that it's worth something because somebody
One
believes
person
in it.
believes in it, and the more people that jump on, the value goes up.
Exactly.
Which is kind of basically the same thing with stocks.
Yeah.
Yeah. So, yeah, it's really interesting. Like, I wonder, is there someone really behind controlling it all, or has it been decentralized in a way that there's no one person behind it?
So it's completely transparent. So like you or anybody can go and look and see at every single transaction that has occurred in the Bitcoin blockchain or any other cryptocurrency blockchain from the beginning of its time. But there is somewhat of a board of directors for Bitcoin or other cryptocurrencies, and they're just developers basically.
Okay.
Now, there's a framework. You can read the white paper on I think it's blockchain.org or bitcoin.org. The white paper just explains like the business model, not the business model, but the model on which it operates on fundamentally.
Yeah.
And what the board of directors or the developers do essentially is kind of tweak it to how do you say this? Cater to what the public or the people that are interested in Bitcoin want with it.
Okay.
So they'll write code, and then these miners, when you mine Bitcoin, you need to put in the current software. There's like chains basically. So the most popular written software for Bitcoin is adopted by these miners, and the majority of miners that use the same one, developed software will be the most popular chain. So everything else doesn't matter. So it's basically like a voting aspect for miners. So they will adopt the most how do I say this? The most popular software that is adopted by miners is the current software used by the blockchain or Bitcoin in essence.
So it just goes with the majority, whichever way that swings.
So the developers are essentially, or the board of directors in this case for Bitcoin, develop the software.
And then whatever people use is what they use.
Is what Bitcoin is.
It's kind of like a consensus by
Exactly.
action, right?
Yeah.
Okay. Wow.
So what niche does Bitcoin fill, and how does another electronic currency coin fill another niche?
So the main issue with with Bitcoin right now is a scaling issue. So it's like how many transactions you can fit within one block. And I won't get into that because one, I'm not as well versed on it as I should be, to be honest. But it gets pretty complicated, and I don't think we have the time for that. So the scaling issue, which is something that the developers, blockchain core, are trying to figure out, or basically come to a consensus with what everybody wants, what's the best decision for the future of Bitcoin. But the other one, for example, it's just like the confirmation time. This 15 minutes that I've been talking about. It takes 15 minutes for this reward to be given out to miners, and essentially once the problem is solved, all of the information in that block, or all of the transactions in the queue, get organized, validated, and then put in the block prior, and then a new one starts. So then like basically, I think I didn't mention that earlier, but once that the miner achieves that goal of the problem, everything prior to that is basically written off, and then it goes in the chain. So it's like in the history. But this 15 minutes that I've been talking about is kind of long. So if I want to go buy a coffee with Bitcoin, I'd have to wait around for about 15 or anywhere within 15 minutes for that transaction to be validated. Imagine if you tapped your debit card, you had to wait anywhere within 15 minutes, like a minute to 15 minutes.
No one would do that.
Yeah, depending on where you are and when it's going to be. So you have these other cryptocurrencies that have shorter confirmation times, and like for example, the second biggest market capital of a cryptocurrency is, I think, around 20 billion right now, Ethereum.
Okay.
And they have 7 seconds.
Oh my word!
So it gets pretty much instantly. It's pretty much like debit. It gets.
How are they able to do it so much faster? Is it just their whole?
It's just that rewards are given out. These problems are solved every 7 seconds. So. The issue with that is that it's easier to double spend, which is another thing that we probably shouldn't get into right now. But like, imagine if it took. We just won't get into that.
Yeah. Well, it sounds like to me like because it's such a new thing, there's a lot of kinks to be worked out, and it's almost like these different cryptocurrencies are maybe competing to be the top one, or has Bitcoin really secured that spot?
So, as of right now, Bitcoin has definitely secured the spot. It's tested its proof, or sorry, it's tested itself for over like 7 years now.
It's what worth 2.3K per coin.
It was 2.8 3 days ago, and now it's at like 2,100. It just dropped. It consolidated.
It fluctuates a lot, doesn't it?
It's extremely volatile.
Yeah.
Extremely.
Which can be good if you want to get in at the right point, get out, and some trading that kind of way.
Yeah,
is that the common thing? People buy low, sell high with it, or do people generally hold on for the long run?
Do you know
it depends on what type of person you are. See, I'm the type of person that likes to trade. That can be good or bad. Usually, you'll end up. It depends on how you trade.
Right.
I'm not gonna lie, I've lost.
Right. Yeah.
But how can you really lose if it goes down by like $50? Then wouldn't you want to just wait until it goes back up?
Pardon?
Because if it's gone between like 2,800 and 2,100 this week, and if you bought it like 22 and it goes down by 100, instead of panic selling, and since you know it's so secure, wouldn't you want to wait until like a month or whatever?
That's really easy to say until you actually have money in it, and
totally.
you're trading, and you have leverage positions. So it's like human psychology just to sell. Even if I bought say 1,000 bitcoins when they were worth $1, so I had 1,000. So I spent $1,000 on bitcoins when they were $1.
Right.
Now it goes up to $10. That's tenfold increase.
Yeah, exactly.
So you're now 10 times richer on that investment.
$10,000.
That's some pretty good gains.
Yeah.
And then it drops to $5, and you're like, oh shit,
Okay.
Yeah. And then let's say you held on to it that time because you have faith in it, and then it goes up to $100, and then you have 100 times more money.
Right.
Or 1,000 times more money, rather.
Yeah.
So, and then it drops again to 500. When are you going to sell? It's going to keep doing that, and at one point you're going to sell. And it's just human psychology to never hold on to these things forever.
Right.
The only way that you could really have done that is if you lost your key for your wallet, so you can't access them, and somehow you found your key again, maybe written on a piece of paper.
Right.
Or if you just simply forgot about the coins that you had and Bitcoin altogether, and then one day you check the price, like, oh, that's right, you're gonna check it, and you suddenly have a couple hundred Bitcoins.
Well, it's a scary thing. You're putting a lot of your own money into this thing. You don't know if it's going to work out. You don't know if it's going to exist in 5 years. So,
well, that's it, and that's just it. The investors nowadays, it's kind of hard to forget about like a couple $1,000s. If you're going to buy a couple of Bitcoins, it's going to cost you a couple $1,000.
Right.
Back in the day, like 6 years ago, 6-7 years ago, you could have spent $50.
Yeah.
That's worth.
I think when I first heard of Bitcoin, it was somewhere maybe around $30.
Yeah, I'd say about the same thing about a
That would have been what, like
2,000.
2009 or 10?
Yeah, around then. Yeah, and I just happened upon it, and I considered buying it, but I was like, I don't know what this is, and I'm like, I'd rather spend my money on other things. But it's wild. Like if even if you bought one when it was like $30, you would have made a lot of money off it.
I remember my dad subscribed to some of these like Business Insider weekly magazines, and sitting on the toilet one day I was reading through and saw Bitcoin.
Really?
And yeah, it was the first kind of like I read about it online, but then that was the first time I saw it in the real world. And they're saying, it's the new thing, it's the new currency. Again, you have these thoughts, but when you're like 15 years old,
15, 14.
you just
I just couldn't really wrap my head around it, and I think I read up on it for a few hours one day, and then I just didn't look at it again.
Exactly, and then
it just seemed a bit overwhelming.
5 years later, it's worth $1,000.
Yeah. Oh God, in 5 years it may be worth tens of thousands of dollars. But the thing is it may not be. It may be something else. Blockchain technology is going to be the future. Bitcoin may not, in my opinion.
Well, I think it's inevitable. I mean, the big banks can fight against all they want, but they'd be better to really jump on the bandwagon a little bit.
So what would the next currency be, you think?
What do you mean?
Do you see any other upcoming currencies that could take its place?
Ethereum.
Yeah,
so number two?
It's about half of its market capital right now, which is absolutely absurd because a month ago it was like 15%.
What's this doggy coin thing?
Dogecoin.
That's just proof that memes and hype can make things worth money. It's got a faster confirmation time, but actually I haven't done any research on Dogecoin just because I know it's garbage.
Yeah.
But it's still worth something.
It's
way overinflated. Yeah. That's one thing I do know is because they're rewards, and it doesn't. So Bitcoin actually stops giving rewards after a while. There's only ever going to be 21 million Bitcoins in circulation.
And once they're out, they're out.
They're out. Yeah.
How do you get rid of a Bitcoin?
What do you mean get rid of?
So how do you, because I can burn a $10 bill.
Yeah.
But how do you burn 10 Bitcoins?
It's always there.
Well, actually, yeah, you can. If you lose your wallet. So let's say I set up a wallet on my phone or on a USB or a ledger or something like that, and you're always supposed to set up a password phrase. So like if you ever lose your phone, or if you reset your phone and you don't have the app anymore, you have this phrase that when you read down the wallet app, you can recover it. So if you didn't set that up and you put Bitcoins on your wallet and then you lost your phone, those are lost forever unless somebody else found your phone and like figured out.
Does Bitcoin ever correct for that, or
no,
is it just?
That's it. Those are just lost coins.
And how does Bitcoin know when coins have been lost?
They don't.
They're just lost.
So how does it know to keep it at?
All right, we just had a little intermission and we're back.
Okay, so we're talking about lost Bitcoins.
Right.
And you said there's a cap on the pool of Bitcoins, but how does Bitcoin know coins have been lost, and how does it know that there's like minus 1,000 Bitcoins?
You can't. It's impossible. And we got there from talking about Dogecoin. So
yes.
And how Dogecoin's inflated. So Bitcoin is something I haven't mentioned yet. Is a deflationary currency, whereas fiat currency and most other currencies are inflationary. So like every year, like what's a normal inflation rate? Like
a couple percent?
2% maybe. Yeah. So Bitcoin does that in an opposite sense. Every 4 years, there's a halvening, or they call it the halvening, of reward that's out. So right now it's 12.5, and last August it was 25. And then the next time it's gonna be half that and half that and half that until 21 million Bitcoins is reached in circulation, which is like I think 50 or 60 years.
Oh, that's what I was confused about. I thought we were already at that point.
Of 20, no, not at all. We're like less than half, obviously less than halfway there.
Okay.
There are like 13 or 14 million Bitcoins that are in circulation.
So they don't care about which ones have been lost. They just care about distributing 21 million, and at that point, they're done with it.
Yeah, these people are going to judge, like, the market's going to be at play, right? So like, even if they're not there, that just means demand is higher because supply is lower.
Mm-hmm.
Right. Okay.
So then the price of them is going to go up, and the price is arbitrary because you can break it down into as many decimals.
So it's interesting. So with the other currencies, with inflation, each one currency
is worth less
every
but
time.
This is worth more as time goes on.
Okay, that's an interesting model.
Yeah.
So that's why it probably stands out as one of the stronger ones, I guess.
Mm-hmm.
Well, other ones follow. Like I don't know all the details on all the other cryptocurrencies, but some of them are inflationary
and some aren't.
Dogecoin, for example, has a ridiculous amount rewarded, and it is like I think it's worth less than a cent right now.
Oh my word!
Just because there's so many hundreds or billions of Dogecoins out there,
right?
Already.
Wow. And
it'll never stop flooding. Like, you know what I mean?
Right.
Yeah.
That's interesting. So I wonder at like what point, is there any resistance from different countries and stuff? I remember reading an article. It said New York made this thing called the Bit License, and if you want to work in a company that uses Bitcoins or sells them or in any kind of way, you need to apply for this license, and you have to pay them money. And I think that's maybe their attempt to try to regain some control over this. Regain, because they never had control to begin with, but.
Yeah, so for the company, in order for them to use Bitcoins in their company?
Or in order for them to, I don't know if it's to sell Bitcoin or to, basically any company that deals with Bitcoin, so within New York, has to apply for this license within 45 days.
So there's definitely pushback from governments because, in essence, which probably won't happen, a cryptocurrency world where the fiat currency doesn't exist, so like the US dollar, Canadian dollar, like peso, everything in the world, it just didn't exist. There were no central banks essentially that could control monetary and fiscal policy, which is essentially flooding the market with newly created dollars that we just said these exist to try and stimulate economic growth. That's the whole point of like having a central bank essentially, and they set the inflation rate, blah blah blah.
Yeah.
None of that would exist with a cryptocurrency world because everybody, the system is within everybody's wallet,
right?
And there's no need for that to be. There's no need for inflation because it's deflationary. That would never happen, in my opinion. I don't think so. I feel that in the future, if cryptocurrencies become much bigger and widely adopted, it's going to go hand in hand with fiat currency. But you may see like a huge flood of fiat currency coming into cryptocurrency.
Right.
So like it would depreciate the US dollar and all other dollars, and then these cryptocurrencies would appreciate.
Do you think they'll ever be like outlawed right out?
You can't. So, well, you can write legislation that hinders the use of cryptocurrencies. Let's say, like a lot of people probably heard about Bitcoin ATMs.
I heard about those. Yeah.
Yeah.
I've seen videos of
So
them.
you can write legislation that says you're not allowed to put a Bitcoin ATM in a building.
Right.
So that hinders adoption, right? So you can slow the process down, but you can't shut down any of these.
Unless you controlled the method which they're being used. So
Unless you control the miners, which you can't. So like you can't like I guess you could write legislation saying that you're not allowed to own a mining device that mines cryptocurrencies.
But then that's just saying
that's
you
just a
can't
whole
own
other like legal.
Because then you can't own
Yeah.
a computer, because any computer could do that.
Yeah. I'm not too sure how it would work, but
I'm just curious how like governments and banks are going to deal with this thing. Like,
they should adopt it, and a lot of businesses are starting to adopt blockchain, not necessarily cryptocurrencies, but the idea that these transactions can be validated through the blockchain technology.
so do you think that? So you don't think there's a possibility that this could just kind of equalize things in a kind of grander sense and just eliminate currencies altogether?
It could, but the chances of that happening are not in the near future, and if it would, it's probably not in our lifetime.
Right.
So in the first episode of season 3 of Rick and Morty, when Rick was taking down the Galactic Federation, he made the currency equal to itself down to equal to zero of itself.
Yeah.
Is it easier or harder to do that with a Bitcoin versus the
Yeah.
US dollar?
You can't, because it's all built on like what people. That whole like I love Rick and Morty, but when I saw that, it doesn't make sense.
So it could never happen.
It can't even happen. Not with those Floydbergs or what's the money in that universe?
Let's just call them like Dogecoins for all intents
Okay,
and
yeah.
purposes.
But like you can't do that, because currency in essence is only worth something because people believe it's worth something.
Right.
So as long as people believe it's worth something, then it's worth something. You can't just do that by changing a number from 1 to 0, because people, even if it goes to 0, people will be like, oh, like I still will trade this with you for this, and that's intrinsic value right there.
And I'm just thinking about like the market and everything, like how like flawed everything is. It's like it could crash at any point for any reason, really, if enough people sold, right?
Yeah, but then it'd be.
But that'd be a
Like-
good time to buy, because then all the people that wait for low to buy
Exactly.
would get in, and then it would go back.
Unless there's a
So-
real reason that would make everybody believe that something isn't worth a lot. Even if a huge sell-off happens and the price depreciates by 30%, we're talking about anything,
Yeah.
even Bitcoin or commodity or anything, then it'll just be bought right back up, because people still believe that.
Right. As long as enough people still believe in it, it will always self-correct, I guess. Yeah.
So it's like a self-driving ship at this point.
Yeah, with a team of developers for Bitcoin.
Yeah.
Speaking, yeah.
Well, any currency, but Bitcoin, yes.
So how can they guarantee that this is secure? Like, can't someone hack your wallet?
Your wallet. So
Or
the safest way to own Bitcoins is to put it on a ledger, and that's basically a USB drive that holds a wallet on it. So in that case, you're completely off the map. I personally keep my coins on my phone. That's funny, that went off right there. So I personally keep my coins on my phone,
yeah.
and that is not necessarily the safest way. Somebody could theoretically hack into my phone if they knew that I had Bitcoins, or if they knew that I had coins, and they knew if they knew I had coins and wanted to take advantage of that.
Right.
Somebody probably could, but the chances of finding out that I do somehow, if I post on Reddit like, hey, I have 10 Bitcoins, blah, 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 and then they somehow find my IP address, and then find out what type of phone I have, and then somehow, put some spyware or malware on my
Should we maybe cut this out of the video?
I don't have 10 Bitcoins, not anymore. I traded them all away.
All right. They're on.
That's how you lost so much.
He's actually misleading you. He actually keeps them on a USB. He just wants to see you try to hack his phone.
Yeah, so these ledgers, as long as you have your password, of course, are the safest way. of keeping them. Sorry, what was the question again? Just
Well, I was just saying, how can we guarantee this is secure? I guess you can't.
the system,
Or can you?
So the system well, you can't. It's like anything else. Somebody could hack the bank, right? Which is a central.
But with the bank, if you get hacked, the bank will replace the money that got taken.
What if all of their money was stolen, and then they couldn't replace anything?
Right. But if your wallet get hacked in Bitcoin, no one's going to replace what got taken.
But it's so hard to single out one person. Whereas in a bank, where let's say you have $1 million,
Right.
and let's say you have a bank versus Bitcoin. Let's say both Bitcoin system is worth $1 million, and the bank is worth $1 million in people's money. So if a hacker wanted to steal, which one would he choose?
Right.
He would choose the bank because
Yeah.
the bank is central. So he can attack the bank and then from there take somebody's money. Whereas in Bitcoin, you can't attack Bitcoin. You have to attack one
It's a
person.
very low probability that
Yeah.
someone's going to target you specifically.
Single it, exactly.
Unless you're on their radar for some reason, I guess. So.
Yeah.
Okay, so last night I opened a wallet. I
Did
didn't
you?
buy any Bitcoin because I don't have that kind of money. But yeah, I opened a wallet just to see what the
Well, you could
process
buy like
was.
$2 worth of Bitcoin.
Okay, so can you buy smaller
Of
amounts?
course, yeah.
Okay, that's
Yeah,
interesting.
you can buy as much money in Bitcoin as you
I
wish.
didn't know that.
Yeah, it just breaks down into decimal points.
So you can buy like 0.0001 Bitcoins.
Yes.
Yeah.
Well, I might buy one just for the fun of it. You know.
$1 worth.
Yeah, maybe even
I think
$40 or
there's-
something.
Yeah, it depends on then you have to go through an exchange, and those are like the mediaries. So like,
So yeah, how do I go about buying Bitcoin?
this is probably something we should talk about. So, in a perfect Bitcoin world, I just have to talk to you and be like, hey, I'll trade you this shit fiat money, these Canadian dollars, for these awesome magical internet money Bitcoin, right? And then you'd be like, all right, so I'll do it at whatever we believe the price to be.
Yeah.
And I can do that to anybody because everybody should have Bitcoin in a perfect Bitcoin world or cryptocurrency world. But here, at this point in time, nobody really knows about cryptocurrencies. So it's hard to find a match for you to buy and sell these cryptocurrencies. So what happens is you have these businesses that are formed that are kind of like the stock market, if you will, for cryptocurrencies. And they're kind of like a Bitcoin bank where you can deposit fiat currency. So I put $1,000 into this exchange, is what they're called. And then from there, I can purchase cryptocurrencies that I want.
Right. Okay.
So my money goes on this website, which is non-central. So if that gets hacked, that's another issue with the system. But in a perfect Bitcoin world, you shouldn't have these Bitcoin banks. Anyway.
Yeah.
So I can buy through there and then transfer my Bitcoins that I bought on that exchange to a wallet, which is where you always want to have it. Because if you have it on an exchange, the odd chance that somebody hacks the exchange, which is the same idea with the banks,
Right.
where it's one central place where people have their money. If they hack that, you steal everybody's money.
Right.
Whereas like if it's on your phone, you literally have to be singled out.
Right.
So yeah, you go on these exchanges and you purchase from there. And then if you want to hold your coins, you should put them on a wallet, either on your phone or in a ledger. I find it convenient on my phone because, hey, if I wanted to pay you for whatever service right now,
Yeah.
I could just do it.
What happens if your phone breaks or USB breaks?
So that's that special phrase password that we were talking about earlier.
You can recover it.
Yeah,
Okay.
so that's something that you would write on paper.
Oh, that's that
and throw-
thing I wrote down. I remember.
Yes.
It's
Yeah.
12 words, right?
Exactly. Yeah. So
Yeah.
you say that, you write it on paper, and you put it in a safe place.
Right.
Okay, so if I have a Bitcoin on my phone, but I have a password, that I have this password we're talking about that links it to
Your
this coin,
wallet.
to my wallet.
Yeah.
And so the wallet is also online at the same time, or does it only live on the phone? Because if I lose my phone
So
with Bitcoin,
the wallet is on the blockchain.
oh okay.
Yeah.
So somebody else there's a record somewhere else that says I have one Bitcoin.
Yeah, you can recover it.
So like
So what if that gets hacked?
your wallet.
No, like that the ledger or wherever it's
The
it's all
blockchain.
hidden,
You
the
can't.
blockchain.
Okay, so what happens is you can hack the blockchain. You can hack it. You can attack it. You can't steal from it.
Right.
And basically, to shut down or attack the system, you need an equal amount. You need to basically overpower the pool of miners. So to do that today is nearly impossible. You
Right.
need Google. If Google was like, hey, you know what, we're just gonna troll Bitcoin right now,
Don't
and like
give them ideas.
you wouldn't. So like, take 15 minutes of Google.
Don't do it, Google.
Yeah, exactly.
Mark Zuckerberg, don't do it.
And then they would be able to attack the system and take it down. They take it down, not hack anything.
Mhm.
And then they would eventually get.
But that's
back up.
costly. So you literally like it's very costly. Now back in the early days, people could just kind of do that, like when it was worth a couple of cents because the system, the people mining it, there wasn't a very large pool. So it was like, so the blockchain in that sense was unstable at that time. But now, since there's so much support behind it, it's extremely stable. It never goes down.
Okay. So when you sell Bitcoins or any percentage of your Bitcoin, how instantaneous does that sell? I know that the stock is very volatile. So if I see it go up, how long what's the length of the transaction?
So it depends on whatever your price is. So like the price goes up and down. It's extremely volatile. It's not like always. Right now it's probably like $2,100. But like within the time that we've been talking, it's probably fluctuated plus or minus $50. It's just going up and down. Now, if the price is at exactly $2,100 right now, and I say I want to sell it at $2,150,
yes,
then it would take an amount of time for somebody to buy that as the price would go up. Now, if you wanted to sell immediately, then you just match the price that it's being sold
so
for
you can
on the
set
exchange.
your price or
Instantly.
Okay.
It's liquid. Yeah.
Interesting.
But yeah, and that's what trading is basically. You set a price that you want to sell at and buy at, and you can lever that.
So I imagine there's some people that probably day trade with Bitcoin and stuff like that.
Yep.
Trying to make a little bit at a time.
Yeah, it's very difficult, though.
Yeah.
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 So if I just bought one now at $2,100 and then put it in for $2,150 and left it there for a week, what would you say the likelihood of that happening is?
To sell at $2,500?
No. So if I bought one Bitcoin for $2,100,
Yeah.
and then put in a sale for $2,150,
Yeah.
how long would it take, do you think, for it to sell?
It totally depends because at that moment, which probably happens to a lot of people, including myself, you can buy something and then it just completely depreciates in value as soon as you buy it. So like, let's just say, actually 2 days ago, there's a huge consolidation. Consolidation just means that the market corrects itself.
Right.
And the past like week and a half, there's been like a massive flood of money into the entire ecosystem of cryptocurrencies and Bitcoin. So everything's appreciated in value. It went from like, say, I think 1,600 3 weeks ago to 28.
Right.
Which is nuts.
So if you sold right at 2,800.
So if I bought at 2,800 and I'm like, oh my god, this is going up, it's going to go higher.
If you bought at 2,800,
and then suddenly,
boom,
it goes down, right? And then now you never know how long it should take for you to sell it at $50 plus that.
But whoever was at 1,600 and sold when it went to 2,800, just in time, they would have
It's perfect, and then bought back.
bought back when it went down to 2,100 or whatever.
So in essence, you can't say it all because it's the stock market essentially, and who knows what would happen.
Yeah, exactly. You can't predict stocks. You can't predict markets. It's almost impossible. You can get good at seeing how like social behavior is, how people react to certain things, and then making educated guesses on that. That's essentially you're still gambling,
Right.
no matter what.
Right.
Yeah, you just get better at it.
So would you recommend somebody starting on the real stock market, or on the Bitcoin market?
I'm not well versed on the stock market at all because I've never traded. I've only ever traded cryptocurrencies, and I can tell you it's the Wild West. For the comparison to actual stocks and cryptocurrencies is simply that it is the Wild West. It is extremely volatile. Yeah.
There's a website if you ever wanted to invest in stocks. I forget what it's called, but you get fake money. But you can buy real stocks with the fake money to get practice with it. And I was playing around with that for a while. It's a good way to familiarize yourself with how it works, and then you can always obviously do your reading and
I took an econs course in college and high school, and we did that exercise in both of them.
Yeah.
So we were given $10,000 to play on this website and then trade for a month and then do a big written project on it.
Right. But I think the big thing is it takes money to make money.
Exactly.
So it's like if you don't have $10,000 to invest, it's going to be hard to make anything substantial, I guess.
Yeah.
But yeah, so I don't even know, like cryptocurrency, it's like, I don't know, I feel like it has the potential to really shift everything in the world, but it also has the potential to just kind of not do that. But I think it's kind of inevitable that people are going to move towards, I mean, not even cryptocurrency, but digital currency in general, obviously. Yeah. Like eventually we won't have.
Well, it's funny, right? Because we went from trading, sheep for goat and sheep for apples to a piece of gold by weight for sheep, right? And everybody agreed that gold is worth something because everybody thinks it's worth something.
Then Genghis Khan comes along with the paper and he's like, hey, I'm going to give you this paper. And then the merchants are like, what? But it's Genghis Khan. You're not going to say no.
Yeah, exactly.
Next
We
thing
just
you know,
graduated.
Now I'm giving you ones and zeros for your 100.
Yeah. And then and then there's paper currency and coins and all that good stuff. And it's like, obviously digital currency seems like the inevitable next step. The question is, it could still be digital and still be Canadian and US dollars, but digital, that's already happening. That's already big.
Well, how
transfers,
often do you actually touch money these days?
Not as often as before. I mean, I have money in my pocket right now, but I can e-transfer someone, or I can.
The difference
buy
is
everything
with
online.
Bitcoin is that instead of it being held remotely in a bank somewhere, your money it is
It's
literally
in your pocket.
It's literally in your phone.
Your own
It's
bank.
literally in your
And see, I think
USB
that's
stick.
the future. I think people want more control. People want to be empowered. They don't want anyone over them determining how their money's spent or how much they're charged to have it held somewhere. And I mean, credit unions are kind of an example of that, because it's like a community coming together to take care of each other's money as like a non-profit model. I feel like people are going to move towards digital currency, and it might be Bitcoin, it might be another one, as a way to just. I feel like it gives you more control over your own life and your own money.
Yeah, and 10 years ago, and definitely 20 years ago, no one would even have imagined the theory of electronic currency. So I can only imagine what happens from 100 years from now. What would be the next step?
I think if people believed in the security of it enough, they would put all their money into it right now. If they could guarantee that it was gonna not depreciate a bunch and stay there. But like if you could guarantee that there's at least some kind of consistent growth in one of these digital currencies, and that it was as safe as it can be, I think a lot of people.
They're all consistently growing though. The thing is like,
and we're not there yet, but someday I think there might be one that stands out that says, that's somewhat consistent in its growth, and that people might say, this is a safe place to put my money for retirement. And I don't think we're there yet, but maybe we are. I don't know enough about it.
no, definitely not. It's going to be volatile for the next for a while, at least 10 years. God knows. I can't even put a number on it.
Well, I think it's the same thing with just real life currencies. Because the Canadian currency, the U.S. currency, they're pretty strong in the world. But like you look at the Zimbabwe currency, and it's like the Dogecoin.
Well, you bring up Zimbabwe, and that was something I wanted to talk about. Is that like these cryptocurrencies are probably going to take off in these third world countries, because a majority of people don't have access to a bank account, right? So they deal with cash.
Yeah.
What is this? It's digital cash, right? That they can hold on their phone. So in Nigeria, for example, since people generally don't have access to a banking system, most people actually have cell phones. And what they'll do is they'll give cash for cell phone credits, and they exchange cell phone credits like minutes.
Right.
In Nigeria, they will pay for things with minutes, and that is their accepted currency.
Right.
And exactly. So they're kind of using the digital currency, but Bitcoin, if that were implemented in all these different places like third world countries and Philippines, for example, as well, there's just this huge untapped market for it to already explode and be used. Right. There's a real use for it here. It can be used for goods and services, but we already have a banking system, and that's why we're reluctant to really jump into it. But over there, you just got to light the fire, and
and that's the great thing about third world countries, though, is that they have the opportunity to skip stages of development. So instead of going with like landline phones and all these wires and whatnot, they just skip to like smartphones, and they skip.
Japan
steps.
did that with cell phones.
Yeah, they skip the second world and go straight to the first.
But mind you, Japan is not a third world country, but
exactly, yeah.
Well, I think that was because of the Second World War, and they just went straight into industrial or whatever, trying to rebuild, and then
just made sense. That's really. I don't know. I feel like it seems to me like digital currency, and it seems like the world's evolving in a way where corporations and these big organizations almost are starting to have more power than nations. And it's like, so if you can imagine all these digital currencies as these big corporations someday way in the future, it's like, they could end up having more power than a nation itself, just because of the flow of money and resources. And like, what would that world look like? Like, is that a dystopian future? Is it a utopian future? Like, where it could go either way, really, couldn't it?
Yeah.
Yeah, you look at some of the major companies now, Google and whatnot, and they definitely have more power than some of the smaller countries in the world.
What's scary is that you can't monetize information. So, they're worth, $300 billion or whatever their market cap may be, but, And information, I guess, would be technically priced into that because that's what people believe information to be worth. But like, they know everything
Right.
that there really is to know.
Right.
You know? So like, how much is that actually worth?
Right.
Knowing everybody's like preferences, so like
Your interests, your complete brain psychology.
Yeah.
Yeah.
And it's only going to get more and more in depth with the technology that they're developing.
So it really, like, nations obviously are going to try to keep up with that. I'm sure the CIA and groups like this are trying their best to keep up, but if it's advancing so fast, like, I don't know.
They would almost have to, well, I don't know, but they would almost have to like forfeit that information over, right? If they're,
Well, there was an interesting case where, like, I think Apple, the iPhone with the FBI, they wanted to access the iPhone, and Apple's like, no, we protect, we're not going to give you access. And I mean that they end up figuring it out anyways.
Yeah.
But it's like there's already this kind of divide between corporations and government. And it'll be interesting to see how that develops in the future, I think.
The future is scary.
Exciting and scary. Slightly more scary, but I don't know. I mean, I think it's equally both.
No, it is exciting.
Because there's the potential for obviously terrible destruction, and with every new technology is a new way that a terrorist can do this, or whoever, any group can harm other people or take advantage or exploit people. But on the same side, all these new technologies provide new opportunities for medicine, for science, for space exploration. Mm-hmm. And it's like, it's hard to know. It's probably going to go both directions. It's inevitable that things, there's going to be people that want to use things to exploit people or take advantage of people or whatever. And then there's obviously going to be the transformative side of it. And I think the key is that there's enough oversight, whether it's over cryptocurrency or AI, enough people with oversight and that kind of thing to ensure that these things are all used in ethical ways. But I don't know if you can ever really guarantee that for sure.
I think the next ethical dilemma we need to talk about is the end of this episode of BrainShake.
Yeah, I think it's a good place to end. Thanks for checking us out. If you have any questions, comment. Make sure to subscribe and
email us.
Email us at
gmail.com.
Actually, you can always email us at craniumshake@gmail.com. BrainShake was taken, so we went with Cranium Shake.
That's beautiful.
Check us out on Instagram at BrainShook, Facebook. Just check us out.
Check us out at Twitter at the Brain Earthquake.
The future's a crazy place.
Hey Corey, thanks for coming on and talking.
Yeah, thanks for coming on.
My pleasure.